Reported an improved performance in the first quarter itself. And you look at the absolute number on a year-on-year basis, there's an improvement out there. And the margins, for the standalone business as well have improved on a sequential basis. Quarter 4 FY20 FY25 seems to have been a bit of a bottom year. And from there, we are seeing some improvement in margins from around 2.5%. It's holding at around 4.7%. And what drove this improvement? Well, the chemicals business. That clearly has seen a big improvement. So the chemicals business, EBITDA, has now clocked more than 400 crores. That compares with around 300 crores on a year-on-year basis as well as on a sequential basis. While the fibers business as well has done some kind of improvement, particularly on a sequential basis. So chemicals business improving, that's what's led the way. Besides that, the newer businesses, paints as well as B2B, that are clocking more than 1,000 crores a piece now on a quarterly run rate. The losses out there have come down. So from around 350 crores of EBITDA losses, that's down to around 300 crores. And both these two are scaling up rather well. Brokerages, well, they're quite enthused with regard to these numbers. Jefferies, they retain their buy rating. They've gone ahead. They've increased the target price to around 3,500 rupees. They say that scaling up of the new business, that's the key trigger with regard to the valuation re-rating. Motilal Oswal, they as well have gone ahead. They've increased their target price to around, the 3,500 or thereabouts. They have raised their EBITDA estimates as well because the first quarter's numbers were quite good. So that's why they've tinkered with that. They point out that the holding company discount is at around 41% and the average of the last 3 years is close to around 37%. So that holding company discount as well a little bit higher. Nuvama, they retain their hold rating, but they've increased the target price to 2,971. They increased their FY26 EBITDA estimates by around 20% because of the beat that we have seen in the first quarter. The reasons are they feel that Grasim is a value buy. The global VSF cycle, well, that's near the bottom, which, they are pointing out. And also they say there's potential long-term value, particularly in the paint segment. So the standalone numbers look quite good, particularly with regard to the chemicals business. The losses in the newer businesses, that's B2B as well as paints coming down. Brokerages upping the estimates for this year. And that's why the stock holding higher in today's session.
All right, Nigel, thanks a lot for that. That's about Grasim. With that, let's talk about Tata Motors.